Yeah, so like Kim and John have been talking about, the procurement section of the compliance is one of the ones that changed the most over the last year. So we're going to dive in a little bit deeper into what all changed within that. So just to start off with, grant compliance starts at tone at the top, making sure that everybody is involved with these procurement standards and making sure that they are getting implemented correctly. It starts with your purchasing department, the legal department, making sure their contracts are correct, the program personnel, and of course your accounting and financing. And all the scary, what can happen if you're not in compliance with these standards. You might lose your federal funding, there might be fines or fees associated with that. And of course, you don't want your reputation to be diminished in any way just for something that could have been resolved by just making sure you had your written documentation. So, like John was talking about, the old guidance was the A circulars. For the government, it was the A87 and A133. The new guidance is the uniform guidance, and these standards are the 200.317 through 200.326, and so we'll just kind of dive right into those. Again, this is a standard that is in effect right now. There was a small couple years where it got extended to where you didn't have to comply with those. Federal entities did, but the non-federal entities, such as the counties, did not have to comply with those yet. But we are this year right now, 2018, is when these are in effect now. So this is just a list of all those procurement standards, and I'll go through each of these individually. So the first one is, I just wanted to bring this up. This one is only for states, so this does not apply to the county, but just wanted to make you aware that this one, 317, is not applicable to the county. The first one that is applicable to the county is the 318. And I'm just going to reiterate that difference between must and should. Must being that it is necessary, and should or encouraged being that is best practice or just a suggestion. So the first one is, like we've all been saying today, is documentation, documentation, documentation. The entity must have its own documentation on their procurement policies of all these things that I'm going to be discussing next. So just making sure that you have those documented. The next one is that the entity, again, must maintain oversight of their contractors for the terms, the conditions, the specifications. You can't rely on your contractors to do that for you. The county must have oversight on those items. The next one is going to be those conflict of interest. This is the one where John was talking about how the procurement standards have a specific conflict of interest section. And right now, the draft for the county, it talks about the conflict of interest, and it says that a conflict of interest would arise when a county employee, officer, or agent, any member of his or her immediate family, his or her partner, or an organization. So making sure that those people aren't involved in the award, the selection, or administrating those contracts, making sure that they're recusing themselves. And also note that conflicts are not limited to individuals, they can be organizational as well. So the next one we'll talk about is the county must avoid acquisitions of unnecessary or duplicate items. So making sure that you utilize what you can, maybe in other departments or things like that. And then there's an emphasis on doing analysis for maybe doing procurements together, or if it's more advantageous to break them out into smaller pieces. And then always the lease or buy analysis, seeing which one is going to be better for your program or the more cost savings for you guys. So after that, this is the only encouraged I think we've talked about, or the shoulds of the uniform guidance. So these are just best practices, and the county is encouraged to enter into interlocal agreements for the procurement of common or shared goods. This would be something like a fleet of cars, maybe, that you could share between governments. And again, this is just encouraged. This isn't a have to do this, just encouraged. Also, kind of with those duplicate items to use federal or excess or surplus property in lieu of purchasing. If that's available, that is encouraged. And then the last one is the use of value engineering clauses in your contract for construction projects of a significant size. And I think right now in the draft, the significant size is at a $1 million contract. So a very big contract, but again, encouraged the entities to do that. So now we'll get back into our must standards. So the county must award contracts only to responsible bidders, and some of the things that would qualify somebody to be a responsible bidder would somebody that you know can successfully perform the terms of that contract or deal, the contractor's integrity, known compliance with public policy, maybe with past use with that contractor, and knowing that that contractor has the financial or technical resources to provide that service to the county. So the next one after that is going to be that the county must maintain significant records to detail the history of the procurements. So again, we've hit on documentation. It's our auditor's favorite word is documentation. So just having that rationale of the method that you use, and I'll talk about methods in just a little bit, how you selected the contract, which contractor got selected and why, and then the basis for that contract price. So now we're through all the general procurement procedures. We're going to actually talk about the competition for these contracts. So the big one and the main one is going to be that procurement transactions must be conducted in a manner providing full and open competition. So some of the situations that would be considered to be restrictive to competition would be placing unreasonable requirements on firms in order for them to qualify to do business with you, maybe requiring unnecessary experience or excessive bonding, if there's an organizational conflict of interest that's known. And then there's sometimes when you are doing your technical requirements, specifying that you have to have a brand name instead of a brand name or equivalent clause, giving them the opportunity to bid on that if they have an equivalent item for that. So the next one in the competition is the geographical preference. The preference cannot be used for an area. You cannot have a preference for your geographical area. There is an exception if the federal grant that you are using does specify a geographical area that is supposed to be used. You can do that, but for the most part, geographical area is a prohibitive item. You cannot use it in your bids.
I have a question about that.
Sure.
So you can't say that a service must be provided in a certain geographic region?
No, I think it's more that you can't limit people that are bidding on your services.
Right.
You can't say we'll only use bidders from the Wichita area. You have to be able to use outside sources from that. So,
Does that include international vendors?
you know, I'm not sure about that, John.
I probably have to. Maybe repeat the question too.
The geographical preference for that the entity must conduct procurements in a manner that prohibits the use of statutory or administratively imposed geographical preference in the evaluation of bids or proposals. Is that what you need?
So the idea behind it is really that you offer open and free competition. So the idea is that you are first advertising it in a way that allows anyone who wants opportunity to service the county the opportunity to provide a bid. So it's about open and free competition. You can't restrict it to a certain area or geographical preference unless that exception that she already mentioned. That's the idea behind it. So if there's an international vendor that sees the advertisement and wants to bid on it, you have to allow that vendor that opportunity.
Yeah, just bearing in mind there are requirements too as it relates to
Foreign activity.
Yeah, absolutely. So I mean you'll want to definitely be cognizant of that. I know with some of the Recovery Act funding, there were certain items written into the guidance that you need to use domestic contractors. So just be aware of that.
Does that answer your question, Matt? So next in the competition, This one just talks about having written procedures for the procurement transaction, and this is just talking about when you are going out for bid, when you're looking for that contractor, that you have written procedures for your technical requirements. And these would include things such as clear and accurate descriptions of the technical requirements for the materials and the products. Again, the description must not contain features that unduly restrict the competition. Again, those brand name or equivalent, not just saying it can only be a brand name, giving it that equivalent. And then identifying all the requirements which the offeror must fulfill and all other factors to be used in evaluating that proposal. So just making sure that you have good written procedures for how you're going to write up your bids. And the next one talks about your pre-qualified list. So the county must maintain a pre-qualified list of person, firms, and products which are used in acquiring goods and services. And this list must be current and have enough sources that you can provide for the maximum amount of free and open competition. So just making sure that that list is staying updated. So now we're going to talk about the types, the methods of procurement. So the first one is going to be the smallest level, and this is micro purchases. So micro purchases are the acquisitions of supplies or services where the aggregate dollar amount, it does not exceed the micro purchase threshold, which is $3,500. So these can be awarded without soliciting any competitive quotations. The one thing to remember is that you need to equitably distribute these among suppliers that are qualified. So you can't have just a sole supplier if there's multiple people that can provide that service to you or those supplies to you. And one thing I did want to mention was that the threshold was increased to $10,000 for some entities, but not the county. So if you had heard that $10,000 threshold number, that's not applicable to the county. That would only be these entities over here that have that threshold. The next one is going to be your small purchases procedures. And your small purchases procedures are those simple and informal procedures for securing those services and supplies. And that's going to be between that $3,500 micro purchase threshold and the $150,000 simplified acquisition threshold. So these are going to be, these can be awarded without soliciting competitive offers. And then the thing you do have to do is you must obtain two sources, but they can be informal. You can go onto the internet, you can make phone calls, just making sure, again, documenting your process, how you're doing it, who you're talking to, and getting it done that way. So that's the small purchase procedures. The next one is going to be your sealed bids. These ones are usually the ones used for your construction. These are going to be anything that's over that simplified threshold of $150,000. These are publicly solicited. You have to list out all the material terms and conditions of this in your invitation for bid, and then you have to go with the lowest price, assuming that you have laid out your terms well enough to where you can rely only on your price. So again, talking about these, you need to make sure you have a complete, adequate, and realistic specification on the purchase description. You need to have at least two or more responsible bidders. We talked about the responsible bidders that are willing and able to compete on this business. And then that the procurement itself will lend itself to this fixed firm price. So again, where you can line out the details closely enough to where all the vendors bring in their bids, they can all be leveled. You can do apples for apples, and the only thing you'll have to worry about is that final price on who you decide. So you will have to go with that lowest price of a responsible bidder. So again, more of the items with the sealed bid, you have to give them sufficient response time in that invitation to bid. I've seen months, I've seen 45 days, something like that, some type of timeline so that they can respond accordingly. And the invitation for bid must be publicly advertised. Again, that invitation for bid must be very specific as you can be without being overly restrictive, so that they can give you a good and reasonable bid for that item. And then all bids will be opened at the time and place that was prescribed in that bid invitation, and they need to be opened publicly, so keeping that in mind as well. And then once you choose the contractor you're going to go with, you need to award that in writing to them. And then you can have, there may be some other factors that will affect the price, such as if they have discounts along with that you can include in that as well. And then at the end of the day, if you don't like any of the bids, maybe none of them met your specs, or the prices were prohibitive to what you were doing, you can reject all the bids outright. You don't have to accept any of the bids. So the next one we're going to talk about is the competitive proposal. And the main difference between the competitive proposal and the sealed bid is going to be that you can take qualitative factors into account with competitive proposals. So with the competitive proposals, the RFP must be public again, and it also must identify all the evaluation factors with their relative importance. So how important are each of these factors going to be? Again, you must get an adequate number of qualified sources to respond to this. Too fast. You must have a written method of how you're going to conduct this evaluation. What are you going to be deciding on? How are you going to say that this company is better than this company now that you're using qualitative factors as well? Again, it must be awarded to the responsible firm whose proposal is most advantageous to the program with price and those other factors, those other qualitative factors considered. And I think in your draft right now, you talk a little bit about using them for the architectural engineering part, and it states that this methodology may be used for the qualification-based procurement of architectural and engineering professional services, whereby competitors' qualifications are evaluated and the most qualified competitor is selected. So that's a case when you can use this kind of method to get those things. Go ahead, Ned.
Is that the only one that you can use it for, or are there others? Like, we have programs where we have multiple providers.
Right.
So we set the price, we have qualifications, but we would want to select several providers. So would that be something we would use this method for?
So here you're looking at, right, you're looking to determine you have to have at least these minimum qualifications like part of your program. So I know a grant that I audit a lot is like weatherization, where you have to have multiple vendors that provide that type of service. So I think in that scenario, yes, you're going to be looking to make sure that you're putting out a bid that they are meet all these qualifications, and then you're putting together a list of those that are allowable to be part of that.
But would that be more of a sealed bid, or would this be a competitive proposal where she could do that? Wouldn't that be the qualification?
Typically those, I guess it drills down to individually, are those over one certain threshold, whether or not.
Yeah. Again, it has to be over that $150,000. It has to be over that $150,000 threshold.
It would be the total
Right.
over that amount, but not for each provider.
So if it's for each provider,
Yeah.
It's not that amount for each.
yeah.
So we would, so it wouldn't be a sealed probably, because we're saying this is what we'll pay for this.
For each service. Oh, so you already have a price set out for it too? Okay.
So I don't know the exact answer on that. It's kind of a unique situation, you know, kind of, you could see the argument going both ways, you know. So I'll look into that a little bit further and we'll get back to you.
Thanks, Nick. So and then the last one is going to be your non-competitive proposals, and these are going to be your sole source suppliers. Maybe there was a public emergency and things need to be done quicker than you could doing bids or something like that. Maybe in some circumstances, I haven't seen it where the federal awarding agency would say that you could use non-competitive proposals. And then it can also be used as kind of a last resort, that after several attempts to get bids, you're not getting anything back. Maybe you're only getting one back. As long as, you're documenting that you tried to solicit bids and nobody was responding, then you could use that sole source provider. But making sure that you document that. So here's a quick rundown of what we just talked about. Again, those micro purchases are that $3,500 and below. Main thing to remember with that is just to make sure that you're distributing those out evenly between any qualified vendors that you have. The small purchases are between that $3,500 and that $150,000 threshold, and those are a little bit more informal to where you could just get a couple quotes by phone, and again, making sure that you document that process. The sealed bids to where anything above $150,000 that you're going out publicly, that the technical requirements of it is where you can basically base that off of a price. So that's the only real variable that you have. And then the competitive proposals, like we were talking about, is just more of those qualitative factors are taken into account. And then non-competitive proposals where you have that sole source or that emergency or as a last resort. So some of the other just general kind of compliance items with this standard, the first one being that the county must take all necessary affirmative steps to ensure that minority businesses, women businesses, and labor surplus area firms are used when possible. So affirmative steps may include placing these businesses on your solicitation lists, putting these businesses on lists where you'll go out for these micro purchases, these single sources. Maybe you can divide up your procurement to where these businesses would be able to serve it if it wasn't such a big project. So maybe breaking that down in that way. So just taking affirmative steps to use these businesses. The next one is going to be the Solid Waste Disposal Act, and this just talks about using recycled materials as much as possible. And then we'll get on to the cost or price analysis. So a cost or price analysis must be performed if anything is above that $150,000 simplified acquisition threshold. And this is just going to be an estimate that the county does on what they think that this procurement is going to cost them or what price they should be paying for that. So making sure that that is done on anything above that $150,000 mark. And something kind of in line with that, if you are doing that cost or price analysis, you do have to have profit as a separate element of that price that can be negotiated. Now, to establish a fair and reasonable profit, considerations can be given for how complex the work is, the risk borne by the contractor, any investment that the contractor has put into place. So there are different variables that would go into account for what profit that these contractors can get from these, from your procurements. The next one is just those technical specs, those requirements that you had put out with for your bid or for your procurement, that those are available upon request by your federal awarding agency or your pass-through agency. After that, the last one before we get into the contract requirements are going to be that you have bonding requirements for all your construction or facility improvement projects. And this is the minimum threshold for non-federal entities. They would have a bid guarantee of 5% of the bid price. They will have performance and payment bonds of the contractor for 100% of the contract price. So just making sure that those contractors are doing what they're supposed to be doing. So the next one is going to be, we're going to talk about some of the contract provisions that are going to be in your contracts with these vendors once you do reach an agreement with them. So I'm going to go through these a little bit quickly. So first one is just your contracts must address any administrative, contractual, or legal remedies in the instance where a contractor would have a breach of contract, and then that would provide any sanctions or penalties as appropriate. All contracts in excess of $10,000 must address the termination cause. And then there's a few acts that will need to be addressed. One of them, such as the Equal Employment Opportunity, the Davis-Bacon Act, which Kim was talking about, the Contract Work Hours and Safety Standards Acts, the Right to Inventions, the Clean Air Act, and then having a statement that they are not suspended or disbarred. And then finally, the Byrd Anti-Lobbying Amendment for any of those contracts that are over $10,000. So at the end of the day, what are some of the common procurement pitfalls? And the first and second ones are kind of hand in hand. Do you have a written policy? Do you have a written documented procurement policy that addresses all of these things that I just talked about? Are they in use? Are you using them? Yeah. Excuse me. Are you doing some of these? Are you documenting all the things that you need to be documenting? So just making sure that those are in place and are adequate. And then just a lack of communication. So making sure that people are coming to trainings like this and learning about the procurement policies, and that you know what you're required to do, what your requirements are for your program. So, key takeaways, talking about just kind of some of those things I just addressed. Make sure you're examining your current procurement procedures, and then make sure you understand those must and should. I think there was only one encouraged in there. Almost everything is a must in here. Again, making sure you have good communication throughout your program and throughout the whole county. Maybe where your auditors have. Check your own procedures. Check your own things. How are you doing it? Is that in line with those procurement policies? Training such as this. And then making sure to talk with your legal counsel about those contracts and making sure that those have those provisions that need to be included in there. So that's all I got, John. We'll continue on.
Thanks, Teresa. I'll grab the mic back from you. Any other procurement questions at this point, or? All right, so we are almost there. Thankfully, probably for many of you. Again, I know we've thrown a lot at you. We appreciate your paying attention, and again, if there's any questions subsequent to our session today, you'll have our contact information. Feel free to reach out. We wanted to take this last about 15 minutes to just go over some illustrative examples as it relates to both the recording of the financial balances, which Kim is going to go through that grant roll forward schedule that I had mentioned. We've also provided the finance department with some practice aids and templates to be used from the program side of things to make sure that we're addressing all of those program requirements that Kim had mentioned, A through N, allowable costs through special tests. At this point, these are just still templates. I think finance is still probably going to work through these and maybe tweak them accordingly. So I don't think this is anything official to publish yet, but nonetheless wanted to kind of go through, show you what some other entities are using and doing, and I'm sure yours will be based on something pretty similar.
And what about procedures too? Would there be county finance would be doing procedures like I've heard?
Yes, those will be rolled out
along with the templates. Yeah. Okay.
So the question was whether finance would be putting together procedures, and that will be forthcoming. So this first template is a grant award summary. And again, what we're trying to do is just kind of capture who's responsible for what areas here, and also identify those key things that we're going to have to put in the CFA, listed here. The type of grant, whether it's pass-through or direct. We're going to document our catalog of federal domestic assistance number here. Again, if the CFDA number is not available, there's a spot to address that. Documenting the DUNS number and various other aspects of the grant agreement. So again, just a good exercise to go through at the award phase and to kind of keep with your grant award agreements. This one is set up more for the application phase, just so you know what. Again, grants are great, but you got to know what you're getting into too from a compliance perspective. And going through this in the application phase, I think, is a really good process and good control to make sure that you have a good idea on what's going to be associated, what requirements you're going to have, and making sure that you have the controls in place and the ability in-house to address some of these requirements. And specifically as it relates to indirect costs, that can get extremely complicated very quickly. So just making sure that you have the resources and ability to stay in compliance with that particular grant. This spreadsheet's a little older, but it was put out by the AICPA Governmental Audit Quality Center, and really a similar format, just kind of going through the grant award and identifying important information within the grant award and making sure that it's documented here. What I like on this one, which I don't think we'll have, But in your handout, you will be able to see, so page 3 of the AICPA one, of the AUDITEE worksheet, lists out each compliance requirement, and then right here we have person responsible. So we're not going to get anything lost. We need to go through.
I think they're in the back.
Yeah, these are all in the back, the last 6-7 pages of the packet here. So again, I think this is nice so we don't get confused. Finance doesn't assume that the program managers are handling a certain function and vice versa. So having that documented up front will be a nice thing. And again, I'm sure finance is going to kind of roll this into whatever templates are formalized and ultimately communicated out to each department. Again, just a similar one where, as Kim mentioned, you can't really just rely on the compliance matrix to determine which types of compliance requirements are going to be applicable to you. They could very well be applicable to the compliance matrix, but not applicable to the county, and that's going to happen very often. Real property acquisition and relocation, a lot of times, is going to be applicable in the matrix, but you're not really going through that activity. Program income could be another one. So using this to kind of go through, and this is exactly what we're doing as part of the audit function. So you're just going to have a head start on that, and we'll be able to kind of have the discussion we need to have come audit time as we're going through and we're documenting, is it material in the matrix? Well, yeah, it is, but is it material to the county? Is it applicable to the county? And further, is it material? Materiality, probably not a concept you want to get into. If it's applicable, it's applicable. You'll want to address that. The materiality is more reserved for the audit time. With that, I will turn it back over to Kim to address some cash management examples and the grant roll forward schedule.
Okay, so John just went through a couple different forms and templates that can be utilized. This is just an example of a drawdown and request. This is one that just has a lot of great components. Obviously, the drawdown form that you may be using can look differently, but the idea here is really just to point out some of the great components of this that either you can think about including or maybe you already have including. So the idea with cash management, again, is to minimize the amount of time you have federal dollars on hand. So that's really the idea behind it. So as part of the process, whenever there's drawdowns, what's great about this form, as you can see right here at the top, it lists out some breakouts in the different type of expenses. It lists out payroll, then it starts talking about direct and indirect expenses, and then ultimately at the bottom you start getting into your total payroll and other direct costs. So also what's great is you can see there's two columns. Not only are you looking at the current period, which could be the month, or it could be the time between this drawdown and the previous drawdown, you're also looking at year to date. It's just an added component that not only are you trying to figure out how much you can draw down, but you're also monitoring in a way. You're looking at your year to date expenses and you're really seeing how is the grant progressing, where am I at, that type of thing. And then also, one other key thing on this drawdown form too that I mentioned earlier, some grants do have what we call this earmarking requirement. You can't exceed a 6% rate for administrative type costs. You can see right here at the bottom, this is incorporated in this drawdown request. There's this admin rate of 6%. It does a quick calculation, and it's really trying to make sure that the admin costs are within that requirement. So kind of including those types of things in your normal drawdown process helps you be able to stay in compliance with a bunch of different requirements all at once. The other great thing I wanted to show about this form as well is, again, not only are you looking at the current drawdown period and then cumulative to date, there's also a spot on here where you're looking at your budget. Again, another great monitoring feature for your grant. You're looking at your budget, you're looking at previous draws, and it just helps you know where you're at with the grant and the funding that you have available. And then finally, the bottom here,
is a spot for the person who prepared the drawdown and a spot for different types of approvals, whether it needs to go through program and whether it needs to go through some sort of finance or fiscal approval as well. So again, documentation, as on the audit side, that's what we look for. We look for those sign-offs. So the other thing to keep in mind is this doesn't have to be a hard copy signature. You can do this electronically if you figure out that that's the best way to handle this. But any questions on kind of this cash management form, or anyone want to share the kind of the form that you're using for these draws, or any nice features that you have included that maybe you didn't see here that would be helpful for everyone to hear about? So the next example that I wanted to get into will be this very large Excel spreadsheet. And so you may not be the one that's actually preparing it, but I think helpful to really touch on what that spreadsheet's doing, just to help you understand why you may be asked certain questions and what kind of information do you need to provide to help prepare this spreadsheet. So we call this your annual grant roll forward spreadsheet. The idea behind it is it lists all your different grants. It has various columns to help track different types of balances and activity. And what makes this spreadsheet difficult is, as we mentioned with grants, there's so many different types of grants and types of activity. They all can be very different from each other. Some grants you're receiving the money up front. Some are all based on reimbursement requests. Some can be just based on the discretion of who the awarding agency is. Maybe they provide, $25,000 set amount each month regardless of your activity. So there's so many different types of grants that it does make tracking it hard. But having this spreadsheet and having everything all in one place is just an added control to make sure everything is being tracked appropriately, and you can see how it totals out, and then you can see how it ties out to the general ledger. So I just listed some bullet points on here. These are some of the key things that this spreadsheet will be doing. It tracks your beginning receivable balances or your unearned revenue balances if that's the situation with the grant. It also gives you columns to be adding in what your current year billings are, which are your expenses. So these are the expenses that are allowable under the grant and pretty much allow you to, they're meeting the definition of what you can use the funding for, and it's your what you use to do your drawdowns. And then as well as a column where you are documenting what came in during the year, which would reduce your receivable. So those are your current year receipts. And then finally, there's a variety of different columns that you can add that will give you information about the award, which could be, is it federal, what's the CFDA number, what agency does it come from. So another feature to help compile all the information that you need that you'll later on need to prepare the CFA. And then some cases there's transfers between grants or different types of scenarios, so you can have those type of other columns in that spreadsheet to help track that type of activity. And again, I mentioned not only federal grant information, but the overall budget or the overall award information can be included on that spreadsheet as well. And then finally, the results on this spreadsheet should give you a calculated receivable. This is what receivable or unearned revenue, depending upon the scenario. And again, this is what can be utilized to help tie back to the general ledger balance and help ensure that your balances at year end are correctly stated. The spreadsheet, though, again, can be utilized in many different ways. You can set it up in many different ways. It could be listed out by agency. It could be listed out by type of grants, by department. So I'll bring up the spreadsheet next, and we kind of look at some of the columns and how that works. But depending upon what might work best for your tracking, you might set it up differently. So this is what this grant roll forward looks like. This is a pretty large spreadsheet and can be very large once you get all the grants added on here. The idea is on the left-hand side, you would have all your grants listed out. You would have your, depending upon how your general ledger is set up, you would have the org numbers and the sub-account information.
This column can be added. It basically is referencing if it's a major program or not for that current year or maybe in past years. So again, these columns obviously can be tailored for how you think it'll work best for the county. But it starts off with your beginning account receivable balances. At the end of the day, how it should work is you should be able to run a report for your general ledger. So if this $13,000 and $14,800 are your receivable balances, you should be able to generate a report from the system that shows how those total out. And that should then tie, obviously, then to the total of this column. So that would be kind of your first check, is you dump in your beginning balances, you'd run the GL report, make sure it's complete and has everything that's on here. Again, I mentioned you might include like a grant award column, that type of thing. And then here you might have a separate column if the grant was unearned or had deferred revenue or deferred inflows. You might include that here on this column. And then there is a transfer column here. If there's internal transfers between different types of grants, that's another added column that you could add. So here's the expenditure column. Here's like your billings. So in this scenario, all of the expenditures are recorded in these 50,000 to 6999 type of accounts. For each grant, this is where you would dump in the expenses that were incurred during that period. So that affects your AR, right? So that would increase, if it's a reimbursement grant, you have a beginning AR balance, you dump in your expenses, that's going to increase your AR. And then you'd also be looking at your payments during the period, because that would reduce your AR. So that would go there. So at the end of the day, if there's no other type of unique situations to consider, no transfers, you know, that type of thing, or matching requirements, you would use then this column at the end that would calculate your overall ending accounts receivable balance. And again, same thing that you did at the beginning of the year, you'd be able to run a report from the general ledger and double check that it would be all tying out with the total. And again, there's a couple other features in this spreadsheet that you can use to help you make sure that your CFA is complete. So using those templates that John mentioned earlier, if you have a template that you're being used that for all grant applications it gets completed and sent over to somebody within finance, that person would use those forms and make sure that all the grants are listed on here. And then at the end of each year, or if you're updating it more regularly, you would be updating the different spreadsheets and columns and making sure that you have all the information you need from the different federal awards. And if this spreadsheet then is listing out all your CFA expenditures, that's your next step to make sure that it's tying out to your CFA and that you have all the information that you need. And it would work the same way with your current year deferred revenue. Again, you'd start off with your prior year. You'd be looking at what got incurred during the period, what got received, and that'll help you determine if there is a current year deferred revenue balance or maybe it's switched to a receivable. Again, it just depends on the nature of the grant. And I guess the last thing to point out is, again, with grants, they can be all really different, so it's not one size fits all related to this spreadsheet. That's the unfortunate way the way grants work. You just have to make sure you know what are the key features of the grant to help make sure you're updating this spreadsheet appropriately. Some of the things that do make it a little bit more messier is if there's matches, maybe a 10% local match and a 20% state match. That can definitely complicate how the spreadsheet's laid out. But again, what's really nice about this spreadsheet is it has all your grants in one spot, has some of the key information that you need, and that helps make sure that your general ledger receivable balances are correctly stated, and also helps make sure that the CFA also is complete at year end. Any questions on the spreadsheet or any thoughts related to it?
So if you had match, you'd probably put in a column for match and just grant expense, if you had
absolutely.
Expenses,
Yeah, I've also seen it in a way where you have a couple different columns, that are state expenditures, local expenditures, and then federal expenditures, and you could kind of break it out in that way. I mean, again, you start making your spreadsheet really long, but in that scenario, it does allow you to be able to track those separately and track it.
So with that, I know everybody's getting probably hungry at this point. So just a few more things to point out. BKD Thoughtware is a really nice tool that we offer that you could sign up for free of charge. We have webinars, articles. Nice thing about it, you can tailor it to just local government, so you're not going to be getting emails on construction or oil and gas or whatever it might be. You could tailor it to just get governmental updates. We're staying on top of any changes in uniform guidance, obviously any changes from the GASB. So a nice thing to sign up for if you have not already. I encourage you to visit our website and pretty self-explanatory on how to get set up from there. That being said, I know we covered a lot of information today, a lot of new information for some of you, I'm sure. But again, if you have any questions at this point, we'd be happy to address those at this point. And again, if something comes up in the future, we're available. Our contact information is here on this slide. But again, most importantly, I think it really comes down to just communication between the departments and making sure that everybody is on the same page and planning appropriately, not waiting till the last second or when we're ready to close out grants to figure out, well, what should we really be doing here? Any questions at this point, then? All right, go ahead.
What's the timeline look like for what the county's going to be doing? So we have kind of some set expectations for what we need to do to prepare for this. So can you talk about that a little bit?
So the question was, what are the expectations for what we're going to be doing going forward? So going forward right now, we're working on getting our procedures and our policies in place. So we're hoping within the next, I'd say 6 weeks, that we can have this all out. So we're going to make sure that we have the procedures out, look at the documents that we had up here, and then roll that out to everyone. So as of right now, just keep going with your current process. And if you have any questions, feel free to reach out to Marty, to Melissa, or to myself. But once we get the policies and the procedures approved by the board and then rolled out to everyone else, we'll start implementing those. Does that kind of answer your question?
Yeah.
Okay.
So like individual programs or divisions, will it be kind of like one-on-one implementation?
Yes. We will have training sessions that will be specifically to the forms, because I know this was a general overview. So once we actually get those in place, we'll have one-on-one sessions, training sessions.
If nothing else, thank you very much for your attention. We appreciate your attendance today, and let us know if we can be of any assistance. Thank you.